Hey, wealth builders, Simon Dixon here, and welcome to episode 16 of Bitcoin Hard Talk. This is where we talk about hard money. Today, we're going to be doing 2023, the year in review. I've been spending the last 2 decades being involved in Bitcoin, obsessing over Bitcoin investing and money, and we're preparing as many people as we can for a world of Bitcoin and central bank digital currencies. So this is going to be my last broadcast for 2023, and we're going to be going through month by month what happened this year so that we can learn what we need to build and protect our wealth with in 2024. So without further ado, let's just jump right in. Let's just set the scene for where we began in 2023. So if you remember, I released the Great Depression of the 2020s video series in 2019, and then that led to a whole COVID money printing environment. And that led to a significant increase in the money supply. Then around 2022, we had the Ukraine and Russia situation. We had a supply side shock and a demand side shock. So on the demand side, we had obviously a massive increase in the money supply in order to fund wars on the proof of weapon network. And so the money printing from those two events went through the roof. And because of that, they started blaming, obviously, the supply side shock, which was the oil shock as a result of the Russian sanctions and the fact that they sanctioned the Russian central bank, marking a big concern around the dollar as a future world reserve currency. And so that was the environment that we kind of started into. We had massive money printing, and that led to an inflationary environment throughout 2022, leading into approximately a peak of 9 to 11% inflation, and the Fed coming along saying, we have the tools, inflation is transitory. They thought it was a temporary thing. They completely miscalculated. They thought it was just based upon the supply shock from the Ukraine and Russia war. And so they didn't take it as seriously. Runaway inflation happened. We all know that if you believe Milton Friedman, which is the fact, that all inflation is purely a monetary phenomenon, no matter what any central bank tells you. So we had that runaway inflation, a cost of living crisis around the world, wealth inequality getting off the scale. In the UK, I remember the people were choosing between eating or heating, and people couldn't afford the heating as a result of those electricity and runaway inflation. So that led to a real desire to combat inflation. If you remember in the UK, we had these rate hikes at the Bank of England that led to almost a bank run on the UK pension market when gilts started to crash as a result of these significant rate hikes. The proof of weapons network goes into the cycle of trying to send everybody that saved the economy by taking on more debt. Remember, all money in economy is backed by debt. In the fiat currency proof of weapons network is backed by debt and weaponry. And so the debt then starts, as interest rates go up, those that are living month to month can no longer afford their mortgage. That cools down the economy by sending the very same people that took on the debt bankrupt. And then we start to control inflation. So you have these big rate hikes, and we move from a quantitative easing environment, which is what we were in 2008 during the very first cycle that led to the creation of Bitcoin. And we move into the quantitative tightening cycle. This is where interest rates are increased and the Fed tries to take off all of the assets that it purchased to stimulate the economy off of the central bank's balance sheets. And so that's where we started the economy. We were moving into the quantitative tightening program. Now, also, just on the crypto and Bitcoin market, we had all of the deleveraging of all the shitcoinery and all sorts of craziness that was happening that always comes along in every quantitative easing led bull market in crypto. And we had people like Do Kwon trying to play central banker, pretending that he had a decentralized algorithmic stablecoin, but it was then backed by Silicon Valley VCs. And it started purchasing Bitcoin and started trying to play the role of central banker with this UST stablecoin. So Terra Luna, inevitably that collapsed. It was being yields were paying like 19 to 20%. That was being subsidized by token money printing, venture capital from Silicon Valley. They were pumping and dumping their coins, and we had the implosion in the crypto market of $60 billion, $20 billion on a shitcoin, and $40 billion on the stablecoin. Then the hedge funds that were investing in that, the famous and most notable one being Three Arrows Capital, they were borrowing money from all the different crypto lending platforms. People were putting their money on the crypto lending platforms in order to receive yield. They were then re-lending it to the hedge funds like Three Arrows Capital. Three Arrows Capital was then investing it and exposing all retail investors. Yeah, people like Majinsky that was telling everyone to take all of their money out of the bank, drain out their pension funds, put it into, and then lending it out to companies like Three Arrows Capital. And then Three Arrows Capital was investing it in pump and dump schemes like Terra Luna, and the whole thing blew up, all because of the fake crypto market. Then we had to deleverage. We had, we had Celsius collapse, we had Voyager collapse, we had BlockFi collapse. And then towards the end of 2022, we had the big kahuna, which was the FTX bankruptcy. That brings us into January 2023. So what happened in January 2023? Well, it started with the depegging, as it were, or of the deep discount with GBTC. Now, GBTC is a product that is offered by Grayscale. Grayscale's parent company is Digital Currency Group, and Digital Currency Group has started off as a Bitcoin investor. There's a gentleman called Barry Silbert, and Barry Silbert created a company called Second Market, and Second Market was a market for purchasing and getting liquidity from stock options and various other things for private companies, similar to what we do at Bank to the Future, but for Bitcoin and crypto companies. And then eventually that was sold to NASDAQ. He had a bunch of money. That money was reinvested into Bitcoin. And because Bitcoin did so well in cycle one, in the 2008 to 2012 cycle, round about 2013, himself and Bank to the Future started investing in all of the Bitcoin companies that made our industry, whether that be Coinbase, Kraken, Bitfinex. You look at the cap table, there was Bank to the Future there, the company I co-founded, and Digital Currency Group were on there. Now, they also created a trust, and this trust was a vehicle, as it were, that was tradable on a stock market that was backed by Bitcoin. So whenever you bought units in this trust or this fund, they would buy more and purchase more Bitcoin. But it wasn't structured as the type of product that's probably going to be launching in January 2024, which is an exchange traded fund. That's a superior product. But because the SEC hadn't approved it from about 2013, the Winklevoss twins were trying to get a Bitcoin ETF approved. The SEC protected pensioners that they ended up with shitty products like global GBTC created by Grayscale. Massive fees, 2% fee, but it was the only way to get Bitcoin into your pension. And for accredited investors that couldn't buy Bitcoin within their institution, they had to buy units in GBTC. It took about 6 months till you could redeem it for Bitcoin, and then it was unredeemable. And there was the way the product was designed was just trying to shoehorn into the existing regulations. Now, in this crypto deleveraging market and this high interest quantitative tightening market, it decoupled from the price of Bitcoin by approximately 50%. This means that everybody that had Bitcoin in their pension through this inferior product called GBTC ended up with a unrealized loss of 50% from actually just owning Bitcoin. So that was the first lesson. Owning Bitcoin is very different to owning a trust within your retirement fund with custodians in the middle that end up with that Bitcoin. Now, why did it crash? Because hedge funds like Three Arrows Capital had a bunch of GBTC. They were playing an arbitrage where it originally was trading at a premium when everybody wanted Bitcoin, and it wasn't tracking the price correctly. And then when everyone needed to get rid of that and sell their Bitcoin, like FTX was playing this trade, Celsius was playing this trade, all of the different centralized companies that were offering people yield, they were playing this trade. This trade goes wrong. You end up with a big unrealized gain on your balance sheet unless it can trade back at par. Now it's got closer and closer to par now. I haven't looked at the price for a while, but I think it's about 12% discount last time I looked. And that's because the GBTC is trying to convert it into an exchange traded fund. So because regulators didn't just approve an ETF, everybody went through this crazy cycle, and that's where we began January in the 2023 market. So it was a big discount to the underlying Bitcoin market. Digital Currency Group, the parent company, was also had these subsidiaries. So you had a company called Gemini, and Gemini was lending as well. It was one of this yield company, but it was like the back end to a bunch of these other companies. One of those was Genesis, and Genesis was created by the Winklevoss twins. The Winklevoss twins, they were early into Bitcoin. They tried to create the original ETF. Barry Silbert came along. He created GBTC, an inferior product, because the regulators wouldn't approve the ETF. And so we went on this crazy circle. But what was Barry Silbert and Gemini doing with all these billions of dollars that companies like Genesis were building on top of Gemini? Sorry if it's confusing. Well, they were lending it to companies like FTX and Alameda and Three Arrows Capital. And so therefore we had this cascading 2008 Lehman Brothers moment. All of the people that had Bitcoin were unaffected other than by the price, but all of those that were trying to find yield ended up in bankruptcies. And by the time we hit January, people were deep into those bankruptcies. And we had all of these different companies. And so as we started 2023, all of those different bankruptcies were unwinding itself. That led to a regulatory crackdown. And so we entered into February, where Genesis, that company that was a subsidiary of Digital Currency Group, they filed for Chapter 11 bankruptcy. And all of the others were already in Chapter 11 bankruptcy. Gemini had approximately a $1.1 billion intercompany loan. It was marked to market on their balance sheet in a very fraudulent way. And immediately we saw the Winklevoss twins and Barry Silbert having online Twitter warfare, exposing each other. They all start suing each other. The regulators jump in. The Department of Justice say there's been massive fraud here, and those cases are still ongoing. And so they're trying to settle with each other. But at the same time, the Department of Justice said, but who was providing the banking for all of these different companies? FTX was, fraudulently sending money between their hedge fund Alameda and their exchange FTX. And suddenly it was getting blurry because Alameda, the hedge fund, had something called God mode, which was allowing all of was allowing them to essentially steal money from FTX. All this time, those who were involved in Bitcoin, they had some price corrections that allowed them to purchase Bitcoin on the cheap. But anyone that had it at these exchanges or invested in some of these companies, they ended up learning a very hard lesson. But one of those companies was Silvergate. So the Department of Justice contacted Silvergate and FTX and said, let's look into those monetary flows. This led to a big movement. So we were talking about Silvergate Bank. This is where we had the intersection in February between fractional reserve banking and then the clients that had banking service that were committing fraudulent services within the Bitcoin and crypto market. Now, remember, distinguishment between Bitcoin. Bitcoin allows you to own your own money, so you don't have a counterparty, spend your own money so that you can send it peer-to-peer, and also protect yourself inflation because the supply is fixed and is not subject to money printing and can never change. And so then you have Bitcoin at a company, a financial institution. that is subject to a different set of rules. So the exchange, Alameda, was fraudulently stealing money from the exchange FTX, which was meant to be client money. And that was enabled through the banking service held at Silvergate, where it could interoperably send funds between these different exchanges. Those deposits shrunk and shrunk and shrunk. Now, how does the fractional reserve banking system means? Because they don't have the money, if people want to withdraw the money, they then have to start selling down those assets that the bank was invested in. Because remember, the biggest risk to fractional reserve banking is full reserve banking. As more and more customers withdraw money from FTX, then that creates demand deposits at Silvergate. Silvergate, if it cannot meet those demand deposits, it then needs to start selling down some of those assets. But what happened to some of those assets? Well, remember, you had Kraken that was using this, Coinbase that was using it, Binance that was using Silvergate, FTX, Bitstamp, many of the companies that I'm a shareholder in. You had venture capitalists like Polychain Capital. You had Block Tower Capital. You had stablecoin issuers like Circle USDC, Binance BUSD, which virtually no longer exists anymore, Gemini GUSD. You had all these stablecoins. And in response to the FTX, Elizabeth Warren comes along and says, Department of Justice, please investigate this. Everybody wants to withdraw funds from Silvergate. They start diversifying, and suddenly this creates a run on Silvergate Bank. As the US Department of Justice starts going into its investigation, then there's accusations of enabling money laundering, all that type of stuff. This leads off the next wave where you have this interoperable relationship between that. But what broke the bank in the end? Well, what broke the bank wasn't actually the fact that people were demanding their money. It was where that money was invested. That money was invested in the products that created the 2008 financial crisis, mortgage-backed securities. So as a review, mortgage-backed securities is where you take all these different mortgages, you slice them and dice them together, you put them into one product, you sell it to people's pension funds and hedge funds. They break it up into little slices. They then create derivatives on top of mortgage-backed securities. They then insure it through Blythe Masters credit default swaps. And you ended up in the 2008 scenario. After unwinding all those things, many banks, they're backed by investments in mortgage-backed securities. It's also invested in loans to the US government. Now, these are considered safe, low risk assets. But what did the US government do? The US government, remember, it was trying to control inflation. So it was hiking up these interest rates. And what happens when you hike up interest rates? Well, it starts to depress the price of those products. Now, that's not really an issue. If you are lending money to the US government, it doesn't really matter if the price of those bonds go down because they will be paid out in maturity. So remember what happens? The US dollar Ponzi scheme rolls over the debt every time it needs to pay off old investors with new investors' money. So the way the proof of weapons fiat currency network works is you have to have more and more people buy your bonds. But if you start hiking up interest rates, it all of a sudden makes the old bonds, when you're trying to sell the new bonds at a higher interest rate, if you're going to buy old bonds with a lower interest rate from somebody, or you could purchase new bonds with a higher interest rate, you'll always go for the higher interest rate, unless you can buy those bonds at a discount. So as you hike up these interest rates, the price of the old bonds goes down. The US government, in order to fund all this proof of weapons, COVID money printing, all of the warfare it's going through, it needs to keep selling these new bonds in the world's largest regulated Ponzi scheme. But if any of those banks have these assets and they need to meet those bond deposits because everyone's withdrawing funds, if they've got a run on the bank, then they need to lock in that loss. And rather than holding that asset to maturity, they need to sell it on the cheap to the market. And somebody says, I'll come along and buy those more cheaply, because hiking rates starts to break things. And so it creates risk to changes in interest rates within the banking system. So, when interest rates start to go up, that then puts the value of these bonds down, and then they are on the bank's balance sheet. And as long as you don't need to meet those demand deposits when people request the money back, it doesn't break things. And we started to get a highlight of how through the quantitative easing market, the system through low interest rates created and rolled over the Ponzi scheme and the consequences upon it. So what do they have so you don't end up in the same situation that happened in the crypto market? Well, they have Federal Deposit Insurance Corporation, FDIC. The problem is, as we saw in 2008, FDIC doesn't have the money either. It's only got about 1% of the deposit, so it can only handle one or two banks going bust at the same time. So it can come along and it can decide to insure it. But what if more banks go bust at the same time? Then you end up with what we had in 2008, the central bank coming along, deciding to take on all those assets, but the central bank wanted to control inflation. And in order to control inflation, it was trying to get rid of those assets. It was trying to lighten its balance sheet, not bring on more things onto its balance sheet. So we ended up having to create a new tool because everybody started to get those demands. Now, Silicon Valley Bank came along around about March in the same month. And what happened? Well, Peter Thiel announced that he's going to withdraw billions of dollars. And when those billions of dollars come in, he started warning other Silicon Valley companies and all the technology companies in the US that they should also withdraw their funds too. Bill Ackman, I'm almost getting a brain freeze there. Bill Ackman, he starts going around all of these different, we were on Twitter Spaces. He starts coming on our Twitter Spaces where we were covering everything around what was happening in the Bitcoin and crypto market, and starts telling everybody that the FDIC needs to underwrite the whole market because Bill Ackman and Silicon Valley wanted to buy up all of these assets on the cheap. They wanted the government to underwrite all the risk so that they could come along and predatorily purchase all of these different bank assets and save Silicon Valley Bank. Because Silicon Valley Bank started having all these people withdrawing, they have to literally stop taking that. None of the Silicon Valley companies could pay payroll. And so in March, we literally had a run on Silicon Valley. China is coming along saying, we're building out our artificial intelligence. Suddenly, none of these companies can pay their payroll. All of the Silicon Valley VCs say, government, you socialize and underwrite everything, and then we'll come and do the deal and we'll make all the money. And so that's exactly what happened. FDIC basically underwrote it and said, if anyone needs a loan in order to pay off some of those bonds, we broke the market, we'll lend it to you. And they ended up pivoting from a quantitative tightening market to a quantitative easing market, and they could not control that inflation. Now then, in March, we had the intersection between an efficient market, and that was stablecoins. So for those of you that are not too familiar with stablecoins, stablecoins are where we create a blockchain asset and is backed by cash and cash equivalent. So for example, we have USDC. USDC coin is essentially a way of sending money around the internet, just like Bitcoin or Ethereum, but doing it on the Ethereum blockchain or the Bitcoin blockchain or other shitcoin blockchains. But it is backed by assets. Now, the interesting thing about stablecoins is they are essentially full reserve banking. It takes that cash. So when someone deposits their money at an exchange, it then invests it and lends it to the US government and then publishes exactly what those assets are. But rather than leveraging up like fractional reserve banking, it's always backed by those assets. But who did USDC have all of their money in order to meet those that wanted to convert USDC to dollars? Silicon Valley Bank. And so Silicon Valley Bank and Silvergate, I forget exactly which ones it was at the moment, as they started to go into shutting off deposits, USDC had $3 billion. I think it was at Silicon Valley Bank. I can't quite remember. Or it might have been Silvergate, the other one as well. And so we have this very efficient mechanism within the stablecoin market, where rather than going to the government and saying, can you bail us out? Rather than the USDC stablecoin, it depegs from its price of $1. So now you have a stablecoin that's not worth $1 anymore. It's worth about 95 or 96 cents. And it was really efficient because it started depegging in proportion to the amount of all of the USDC in issuance, but just for the $3 billion that was marked up in the bank. And so we started to see that actually full reserve banking is a free market mechanism where you can have a stable coin backed by directly issuing and lending to the government, some of it in the fractional reserve banking system. And the fractional reserve banking system was breaking where people couldn't get their deposits, but USDC was depegging. And so rather than having this Ponzi market where the government has to bail it out and roll it over, you have an efficient market where those that own the stable coin, they can't redeem it for par. And it was broken by the fractional reserve banking system. As soon as that, the government started to underwrite it, the peg went back and it went back to a one-to-one banking. So we learned that stable coins and full reserve banking are incredibly important and efficient and actually are intertwined with the banking system as things happened when people need access to those deposits. And if any of those banks are serving the crypto market might have led to the volatility where people need to access those withdrawals. But in the end, what broke the system? It was the Fed that broke the system. So then we had in March a bunch of banks that went bust, Silicon Valley, Silvergate, and we had Signature Bank, another one that was actually pretty well diversified, but was working with the different Bitcoin and crypto companies. So we had this supply shock through quantitative tightening, and then it started to go into the European banks. Switzerland literally negotiated a merger between two of the largest Swiss banks, which was UBS and Credit Suisse. Credit Suisse, this powerhouse Swiss central bank, was about to blow up. Even Deutsche Bank, which you famously remember, has massive exposure to the silver market at the time. Deutsche Bank started to get the cost to insuring through these credit default swaps, banks went through the roof, and we ended up with the US bank run crisis of 2023. China was watching. Russia was watching. Everybody was watching. So Russia had already learned that if you have dollars as part of your reserves, then the US can just press delete on your money. They also learned that there is destabilization in the banking market, and everybody knows the bond market and loans to the US government is where you can destabilize the banking market. China has its treasuries. China has about over $4 billion that is lent to the US government. These relationships start to break down, and then you start to have major issues. So regulators step in. This is when we move over to about April. You had this bank term funding, tool that was just created in order to fix the banking system, but it was really just backed up by confidence. You could get those loans, but it exposed the complete weaknesses of the financial system. So then what happens in April? April, we have what is kind of published by Nick Carter, Operation ChokePoint 2.0. Remember that one? This is where essentially from Operation ChokePoint 1.0, an interesting story. I'm in the Isle of Man, and Operation ChokePoint 1.0, one of the industries that the Fed and the DOJ and a coordinated attack between the US government came after was online gaming. Now, a bunch of it moved over to the Isle of Man, and the Fed actually tried to shut that down, but they created a regulatory system for it. But the way that they stopped it happening was choking the bank account. So the companies that wanted to perform the activities that the US government didn't want to support, they started getting their bank accounts choked. We started to see this throughout the whole history of the Bitcoin and crypto market. So all of a sudden, all of these companies that the US wanted to come after Binance, for example, they choked their bank account, and now nobody could get their dollars into the system in order to convert it into with these exchanges. And then the regulators came along and they went and said, right, we are going to clean up the industry. So in April, you had a Wells notice, and the SEC started suing Coinbase. They're saying, you're okay with Bitcoin, but all of those other things you're trading, they're securities, and you haven't got the licenses to do it. The Coinbase says along, we don't think they're securities, we'll fight you. And then they go to court, and those battles are still being fought in court. Ripple Labs, another company, they come along and said, you know, those tokens where people are buying this XRP and you've got Ripple stock, well, we think those are securities. So Ripple Labs then decides that they'll take the battle with the SEC, and they'll determine in court, and we have these battles. And then Kraken comes along. They were offering Ethereum staking. Remember, you have Bitcoin proof of work, which is backed by electricity and mining. Proof of stake, which is whoever owns the stake has the say in the network. And then fiat currency is proof of weapons. Those that can print enough money, sell it to those, roll over the Ponzi scheme, and back it by weaponry. And the banks get to make all the profit because they create the digital currency in the proof of weapons network. Well, Kraken is forbidden from doing Ethereum staking, and so they have to close off that service and pay a big fine. Paxos, which issues stablecoins, and one of the exchanges called Binance, they are told that they because Binance is engaging in money laundering, then they went through all of the different transactions that they were doing. They published this money laundering report and saying that Paxos, by supporting Binance, they're breaking all of the Bank Secrecy Act, the anti-money laundering regulations, FinCEN, the Financial Crimes Enforcement Division. And so we have this regulatory crackdown that brings us into May. We are only into the beginning of this year. Now, Bitcoin still works. Money you can own, money you can spend, and money that has a fixed supply. The price starts to suppress. If you followed any of my work and what I was teaching in the Great Depression of the 2020 video series, you were buying it every month at a cheaper price. You were valuing your wealth in Bitcoin, and you were thinking in terms of Bitcoin rather than thinking in terms of fiat. In February of next year, I'm going to be doing my annual Wealth Builder program for those that want a refresher on all of those rules that did incredibly well out of the last cycle. Then I'll be doing that about February. I do it once a year. And you just have to be signed up on simondixon.com and subscribe to my newsletter. And I'll make sure that you get a notice about that as well. Okay, so we had then a bit of a Bitcoin pump based upon the fact that people were learning. Now, every time I've been through a Bitcoin cycle, people learn the value of owning your own money, spending your own money, and having a fixed supply to combat inflation. As the bank starts collapsing, the Bitcoin market starts to turn around. You start to get a bit of a Bitcoin pump because people start to value owning their own money. They can see the value in self-custody rather than custodying with these exchanges or holding your money at a bank. And that brings in a bunch of volume into Bitcoin. And then we start to see some of the use cases as Bitcoin turns around of some of the upgrades that happen to Bitcoin. So remember, during cycle 3, when we were having this whole Bitcoin block size debate, and it took years and for us to battle to get a change in the code, because Bitcoin code is more like a commodity. It's very hard to change. You have to get consensus from all the miners. It's got a very incredible high bar. That's why Bitcoin is so different to all the others, where you can't rely upon it in the future. Well, it got a change called SegWit. I don't want to go into that. You can look it up if you're interested in that. But it also led and enabled something called Taproot. And Taproot was the latest change. It got through, and this allowed people to do essentially on Bitcoin what they have been doing upon Ethereum. And so we started having all the shitcoinery and people creating tokens and non-fungible tokens and all that stuff. we started to get a spike in Bitcoin. We had these things called ordinals. And so ordinals then started subsidizing some of the money that miners make in the proof of work network. And so we started to get these higher transaction fees, and that starts to pay the miners. The market starts to adjust. It's an incredibly efficient market that adjusts to these new innovation. We then start to have the whole debate around fees again. The fee to transact on the Bitcoin network peaked at around about $31 for fees. Miners started to get those those things, and some of the dump that happened in the publicly traded mining companies that were over leveraged started to increase again. So there's mining companies that were on the public markets, on the public stock markets, they started to have a bit more stabilization. Those that were over leveraged went bankrupt, went into Chapter 11 to go through restructuring, but the market then adjusts. We now move into June 2023. In June 2023, we started to see the big impact of de-dollarization. So as a result of Russia having their dollars deleted, as a result of the banking system from the US bank run crisis of 2023, as a result of the geopolitical environment between NATO expansions and some of the other territorial battles that we were starting to get hints of that were left over from the Cold Wars or World War II, you know, whether it be Taiwan, whether it be Israel, Palestine, whether it be Ukraine, Donbass, Crimea, and some of those territories, you know, with China, Russia, US, and Israel, these all start to become and resurface again. And the world starts to put together a central bank digital currency network that clears through Hong Kong, through the Bank for International Settlements. And the whole talk comes around de-dollarization. We start to get all these different agreements that are happening, currencies clearing in Chinese yuan, different networks being built, BRIC, Brazil, Russia, India, China, they start taking in more members. Bangladesh starts to join. You get all these different agreements that are happening. Some of the African nations and various other countries within the continent of Africa start saying, the president of Kenya comes out and starts saying, wait till you see what's coming. And we start to get a decrease in those that are holding their reserves in dollars and de-dollarization and competition within the clearing market. SWIFT, as they start to sanction Russia, these different alliances and geopolitics really starts to come into the mix. That starts to move us more into fears around deglobalization and more of the, geopolitical defensiveness and people starting to pick their sides. There were peace treaties that were being signed, whether it be the Abraham Accords, where it's taken the three major countries that were representing three different Abrahamic religions, whether it be Islam, Judaism with Israel, and America, mainly Christian and Judaism, and some of the different countries like Saudi Arabia that was siding up and becoming more westernized, following some of the UAA types of growth that they were looking to follow. This then leads into some of those alliances. And then in the proof of stake network, Ethereum fully transitions around about June by enabling people to not just stake. So remember, Ethereum was originally a pre-mined coin that was built upon proof of work, and then it switched to proof of stake. Now, the proof of stake now is who holds the biggest stake. Everyone was depositing their ETH at exchanges, and now the exchanges kind of become the controllers of the Ethereum network. It's trying to push more decentralization, but technology drives them to store in those ETH at exchanges. Exchanges then control the network. In around about June, they started enabling unstaking. And unstaking means you could pull your ETH out of the staking network. And then we moved to really this whole proof of stake, Ethereum, being the representation of all the financial products and central bank digital currencies if they're going to be built on public blockchains. China, and one of the regions and one of the regional banks in China said that they're building their regional central bank digital currency on top of Ethereum. And it becomes the network. And so more and more banks start to get into this. They probably start moving into, for example, more and more of these financial institutions start buying Ethereum, and then they become the controllers of the proof of stake network, while Bitcoin becomes the decentralized network, because mining is more of a, rather than actually the miners, those that operate the exchanges and those that control the nodes are different players. So it doesn't end up controlling the network in that way. So then we roll over to July. You see how everything's playing up into what started to happen towards the end of the year. So now we're in July, we start to see the criminal arrests from those that committed all the fraud in the crypto market. So those that were involved in the biggest fraudulent behavior, they start to get arrested. We saw Do Kwon from the Terra Luna Ponzi, which, then playing central banker. They blew up $60 billion of investors' money, which started the whole deleveraging crisis cycle. He gets arrested in Montenegro. No, where was it? Oh God, I can't even remember. But he did some passport fraud, and now he's going to be extradited to the US. I think they announced both South Korea and US wanted. Through the Celsius case, Judge Glenn started to require the Three Arrows Capital people to come to court. They defied the court appearance. Kyle Davis and Su Zhu behind Three Arrows Capital, they start to get their first arrest warrants. Alex Majinsky, the FBI were investigating Alex Majinsky behind Celsius. He created a $3 billion hole, persuaded many pensioners to take their money out of their pension funds, put it into Celsius. When that blew up, he was hiding a multi-billion-dollar hole. And then the SEC, the DOJ, they indict Alex Majinsky, put him under house arrest. Ronnie Cohen-Poven, which was in Israel, Daniel Leone. Ronnie Cohen-Poven pleads guilty, and we will see what happens from that. And we will see throughout 2024 what happens to this. Daniel Leone, he starts actually partnering while he's involved in this $3 billion Ponzi scheme fraud. He creates his next AI startup while he's partnering with Netanyahu and the president office in Israel. And so it seems to be that there's certain protections that seem to come from there, as we started to see from these geopolitical relationships that we saw later in the year. Sam Bankman-Fried, his trial starts, and he starts to get arrested under FTX. Then Majinsky and SBF both gets accused of up to 115 years in jail. Later we started to see what happened to SBF. We are now moving over to August 2023. For those of you that have been saying to me recently, stay in your lane, Simon, don't discuss some of the wars and geopolitics, you now understand this is all interrelated. The proof of weapons network, fiat currency, is interrelated with the proof of work network, which is a counter exit from the proof of weapons network. And the proof of stake network might be used in order to build out the central bank digital currency network as we transition and deleverage from the proof of weapons, debt deleveraging over to hard money to protect yourself in proof of work network. And then you build these financial products that are not based upon debt on the proof of stake network. You see how this all interconnects? And that's what in 2024, when we cover in the Wealth Builder program, I'll share with you how I protect myself. So whatever happens, I'm okay. I don't care. And that's what I want for most people. But what happens next? We start to get adoption in China for DCEP, their central bank digital currency. You start to see them add it to the balance sheet in their rollout. And then you get FedNow, the central bank digital currency that the Federal Reserve had been working out. They start to pilot it out on smaller transactions. All of the banks need to sign up to the FedNow network. And then we have clearing on a private blockchain, and they start to really roll out and get ready for their central bank digital currency launches. Now we move over from August to September 2023. China starts to become a serious concern in terms of its copying of the US model. So while China was built upon savings and having export currency warfare, where they devalue their currency to make their exports cheaper so that people buy that. Now, remember what happens during these 100-year empire cycles? The Dutch Empire was built upon the cheap labor of the Brits. They created capitalism as we know it today, stock markets, central banks, the Dutch East India Company, where their colonialism was funded by selling shares to everybody on the stock market through profit shares. They build out ships and innovate, and they hire the cheap labor of the Brits. The Brits are the cheap labor, like China was for America. They start building out all the naval fleet ships. They copy the Dutch Empire. The Dutch Empire starts to get, because they're not the cheap labor, they're no longer as hungry. They start financializing, demonetizing, and central banking demonetizes. It creates inflationary networks. And then the UK comes along. They build out the British pound. The British pound is backed by the proof of weapons of the largest naval fleet. They then becomes the efficient. The labor gets more expensive. As it gets more expensive, they start to build out their empire. And then it starts to have its colonial expansion. Suddenly, it is no longer profitable to run the empire through too much expanded colonialism. You end up in the world wars. And then America comes along and says, we'll stay out of the wars, but we'll provide all the weaponry. Britain gets destroyed. Europe gets destroyed. And they end up with a declining world reserve currency. The dollar comes along. The dollar then becomes the next empire. They build as they go with the cheap labor of China. China copies all the AI innovation, the technology innovation. They start to become more developed. They then start taking on debt, and you have this cyclical world reserve currencies that we see time and time again. Now, China moves from a savings-based economy where it was lending $4 trillion to the US, holding those on reserves, starts to get freaked out and concerned about what they saw in the US banking debt run, the US bank run crisis. And they start deleveraging and going down with their US Treasury reserves. They see what China did. They spot a trend. They sell off about $481 billion of their treasuries at these peak levels. And so the rate of selling really starts accelerating, and they start going more and more into hard money. They start increasing their gold reserves, deleveraging on their debt, getting ready, just quietly watching along. And they also copy the IMF model. Remember, in previous episodes of Bitcoin Hard Talk, the IMF is used in order to get dollar debt around the world. And then export warfare is used in order to cripple the countries that borrow your dollars. You print them because there's demand for them. And then the other country, they print money. It destroys all their wealth, destroys their country, and they end up deep in debt in dollars. And then you end up with no dollar reserves, as we saw in Sri Lanka, as we saw in Pakistan, as we saw in those countries that were deeply affected by their IMF debt. China's Belt and Road Initiative, the equivalent of the IMF in China, now has $1 trillion of loans out there for infrastructure projects, but they're in a debt bomb because all of these countries were now looking to US IMF debt and China debt. They're competing. The private sector comes along, the hedge funds, they do all the corporate debt, but they get the government to guarantee it. And they end up bailing out the whole system. We have this over-leveraged system where the China banks are all trying to roll over the debt-based Ponzi scheme again, following the US model, and we end up with over-leveraging and over-debt globally. We now have this global debt bomb with globalization being, because of these currencies, less trust. And so people start looking at money you can own, money you can spend, and money that has a fixed supply. China then starts allowing Bitcoin mining after the 2022 China ban. They started allowing more and more Bitcoin mining. America, Iran, Russia, China all start competing to repurpose their electricity and put as much energy into the proof of work network as possible. El Salvador is still following its Bitcoin strategy. It's expanding out its mining operations. it's trying to repurpose some of its electricity. We get a Bitcoin mining pump where you start getting sovereign nations competing in order to repurpose their electricity in order to build and pump out more hard money and putting together different regulatory regimes. And we start to get Bitcoin turning around in its 4-year cycle. Remember, there is only so many Bitcoins left to mine. There is only so many you can buy. We've mined about 19.5 million of them. Sovereign countries, public companies, they're all trying to mine them now. And we have these ordinals and various other things that are increasing the fees. And that brings us into October, where mining then becomes something that China embraces again. Then we move into October. Now, October, we had absolute carnage in the crypto market. We were following the Sam Bankman-Fried trial at the same time as the proof of weapons network requiring excessive money printing in order, now that inflation is under control, now that inflation's coming down by manipulating the stats, you can then start to think about how to switch to Ponzi economics. And so you need to roll over the debt again. So you pump out the proof of weapons network. The proxy wars between NATO and Russia, they start to escalate, more and more money printing. Bills are out there. You start to get the proxy wars between Iran and America. That starts some of the more and more money printing, and that escalates when the Abraham Accords are starting to be signed. Palestine are feeling they get left behind. There is a resistance movement that culminated in the events of October the 7th, which then escalated the most brutal retaliation we have ever seen, where you now have 600,000 Palestinians being starved right now, and a regional escalation where Yemen start to attack ships. America and the Brits start to put together a naval type of retaliation on those Houthis that are attacking the ships that are coming into Israel. You then start to see Lebanon, whose their central bank destroyed their country, where they had a complete wealth destruction as a result of excessive money printing and the lack of dollar reserves from all the IMF debt. You get the same in Ukraine, all the excessive IMF debt. You then start to get this money that is being printed from the proof of weapons network, getting US taxpayers to pay more, and literally America starts funding genocide. And now we're at the pressure where it looks like maybe in January after Christmas, the pressure from all of the social media and Twitter spaces leads to the fact that they can no longer fund genocide, and that becomes a political play. Why? Because we're now moving into the 2024 election cycle. So in October, we get a big pump in Bitcoin. Why? You had the 2023 bank run crisis. People can't own their own money or spend their money, and they start to see the risk. Sovereign nation starts competing in order to support the proof of work network so that they can then de-risk themselves from the Federal Reserve and some of those changes. We get regulations. We get virtual asset service provider regulations from the US implementing all these regulatory attacks. Other countries see it as an opportunity. They put together a regulatory regime. We then have runaway inflation. So people try to protect themselves from the inflation. And now we have wartime economics. What happens in war? You can't trust fiat currencies. You get excessive money printing. The countries that win the war get destroyed by the countries that lose the war. And then you have to have currencies that can't trust each other. A monetary renegotiation. Remember what I covered way back in the Great Depression of the 2020s video series? You have war as a result of the proof of weapons network that then leads to a monetary renegotiation where the debts of those that lose go to those that win, and you have a hard money cycle. I believe that Bitcoin will be involved in this one at the same time, and we start really escalating where China comes along and said, we're ready to reunify. When I moved to Hong Kong, it was the middle of the Hong Kong riots. That was from a headache from the British colonialism, where it got China addicted to opium in order to invade the country, and ended up with Hong Kong as part of the negotiation. It has to go back, and a hangover from World War II, where the US proof of weapons network supported both the China Communist Party and the China Nationalist Party. China says that it's going to reunify. And so you have these big geopolitical tensions escalating and escalating within the Middle East, within the Iranian and US proxy war, within the hangovers from the NATO and Russia proxy war, and then the China and US side around reunification of Taiwan. The proof of weapons network getting more and more aggressive may lead to some of the geopolitical things that we're seeing right now, where various types of non-state actors start attacking all of the different. Remember, the proof of weapons network through foreign policy leads to all these bases all around the Middle East and all these different countries being attacked. And you start to see escalation, as we are starting to see with the naval ships. Sorry, not the naval ships. Some of the military ships that we're seeing around getting goods into Israel. So that's when we're really started pushing out there. We should de-escalate. The proof of weapons network is pumping lots of money. And although people might say we believe in peace, they need to pump the money in order to maintain the debt-based Ponzi scheme. And the flows continue as usual. So then we move into November. October was absolutely tragic on a humanitarian perspective. November gets worse. December gets worse. But what does November do? We start pushing more into the Bitcoin bull cycle. All of these trends are coming together. The regulators are now wanting to support Bitcoin within the traditional financial markets. All of the companies that went through the 4-year cycle and were valuing their balance sheet in Bitcoin, they get tax changes where you can now mark up the increase in the price of Bitcoin on your balance sheet that will happen around 24, 25. Who's the company that led the way in terms of taking a public company, borrowing against that stock and buying Bitcoin? MicroStrategy. MicroStrategy, ridiculed throughout the bear market, is now the hero of the bull market and shows that having money you can own, money you can spend, money that has a fixed supply within a corporate structure. Now all the technology exists to do it at the corporate level. MicroStrategy significantly outperforms selling software by holding Bitcoin on their balance sheet. And more companies want to copy the same strategy. El Salvador, that was ridiculed. I went over to El Salvador in February of 2023, this year, to have my second meeting and go meet President Bukele, putting together a Bitcoin strategy with all those that were involved in constructing that. In 2024, the Bitcoin bond strategy is through a company I'm a shareholder in, Bitfinex. They're looking to reemerge that strategy. El Salvador, they accumulate throughout the whole cycle, and they start to show that you can do it on the sovereign level. We have Binance, which is the largest exchange. Then they get caught on the wrong side of many of this money laundering. As we start to get, they start to open accounts for certain groups. They get investigated, and suddenly they get a $4.3 billion fine. That $4.3 billion fine was exercised because they were funding, essentially, a part of those accounts, not all of them, were being used by certain groups that were on the wrong side of America's proxy wars. They then hand it over and immediately get a bill approved in order to send the money over to Israel and fund the terrorism and genocide on the other side of that network that we're seeing. And so you start to see how these different narratives all play out, and Bitcoin becomes the exit from the financial system. It wasn't Bitcoin that they were using, because putting Bitcoin on a transparent network means that you get an immutable record of all of these crimes. So now we move into where we are right now, December 2023. In January, in April of next year, 2024, we start moving through the trend that we see in every halving cycle. So in the proof of work network, every 4 years, the number of Bitcoins that miners receive every 10 minutes cuts in half. That happens in April 2024. So as people start to adjust the supply and demand economics, people's demand for Bitcoin goes out while the supply starts shrinking, and the price is what basic free market supply and demand economics prevail, and we start to hit 44,000 or whatever we are at right now. And at the same time, the TradFi system says if you can't beat them, Larry Fink used to call Bitcoin a tool for money launderers. He now says it's a tool to protect yourself and a flight to safety, and starts applying to launch Bitcoin financial products so that we don't have this crazy arbitrage where we started January that blew up the markets because the regulators are now happy to approve BlackRock. Why? Because BlackRock, remember when Bitcoin started, was the algorithm that was assisting the Federal Reserve and the US government in determining which companies to go bust, Lehman Brothers and Bear Stearns, versus which companies to fund and give all the assets to, JP Morgan and various other ones. And so it all goes full circle. ETFs start to probably be likely approved in January. All of the Chapter 11 and bankruptcies, they start to become, because there's this rule in the bankruptcy where you lock in the amount that the bankruptcy owes you at the bottom of the market, Bitcoin starts to pump. It starts to reach this crazy situation where I've been involved in one of the bankruptcies, Celsius, where if the price of Bitcoin goes above 54,000, you end up with less Bitcoin, but being made whole and bailed out by the growth of Bitcoin. So you start to see that the bankruptcy processes start to work against you, and you have this thing that I called the Bitcoin rug pull that I've been talking about a little bit more. But the underlying fundamentals are still there. Inflation is being hidden. We move to quantitative easing. The Fed says in 2024, we're likely to have 3 rate decreases. They are getting ready for a QE Ponzi scheme again. Why? Because we're moving into the election cycle. Genocide Joe, after being incredibly unpopular for funding these proof of weapons network, needs to fake pump the economy, and war is the best way to do that in the proof of weapons network. Bitcoin has its 4-year cycle based upon peace, proof of work, repurposing electricity. The proof of weapons network is based upon the 4-year election cycle of the prevailing world reserve currency. The current world reserve currency is a US dollar. The banking system and the fractional reserve banking system is broken. The economics are a $27 trillion economy on $34 trillion of debt. There's $650 billion of losses sat on unrealized losses on those banks' balance sheet. They need to get those interest rates down. They need to pretend inflation isn't a problem. They need to pump the assets, which creates more wealth inequality, which creates this big polar debate between the left and the right. And so you get the Ponzi scheme going, and you roll it all over by persuading more people to buy treasuries. Where's the demand for treasuries? Central bank digital currencies. So when the banks blow up, you issue a central bank digital currency, and that will take the bank out of the middle and go direct from government funding, deleveraging the debt, through to the technology of the central bank digital currency. And we move more into more communistic ways of organizing our economy. And the terrorism is used to enable digital IDs. COVID is used in order to enable, we must understand vaccines, negative interest rates programmed into the central bank digital currencies. We end up looking like one global system. And in the end, probably artificial intelligence says, you humans are crazy. Look at what's happening. We basically have had the first AI-led war, which is leading to the complete destruction, war crimes of civilians in Gaza. And AI is being tested. That's certified. That gets to be rolled out in all these different types of proxy wars. So proof of weapons network can no longer become a conduit for peace. And then we have this technology wars that are going to come. So getting way back to 2024, likely we get the January ETF. This means pensioners can protect their pensions using Bitcoin from any of these trends. February next year, we'll do our Wealth Builder program that we do every single year. Sign up to simondixon.com, create yourself an account, and we'll notify you. It's something we do once every year for all of our members. You're going to end up probably getting, this proof of work exit from the traditional financial system. You get these proof of weapons, war-led quantitative easing, and then we move into the election cycle. They need to get those interest rates down so they can pump the Ponzi scheme and roll over the hot potato to whoever is in charge next. And the world reserve currency continues until it no longer continue and ends in a hyperinflationary cycle, normally characterized by war. And whoever has the largest Bitcoin to GDP and gold to GDP, backed by the largest proof of work weapons network, CBDC, becomes the winner of the next monetary renegotiations. And I believe that eventually we have it where, if you want to find out what that war is, whether they'll ban Bitcoin, that was covered in last episode of Bitcoin Hard Talk. So we start to really further the central bank digital currency regimes, AI-led warfare, AI-led central banking. And remember everything that I said in the Great Depression of the 2020s, you have to protect yourself from every outcome. You don't know when it's going to happen. You don't know when exactly it's going to happen. You need to be ready for war, ready for pandemic, ready for bank crisis, ready for digital currency group, ready for Tether, ready for stablecoin regulations. Be prepared for everything. And that's really been my style and why I'm able to give content, because whatever happens, that's where we start to build and protect our wealth, ready for a world of Bitcoin and central bank digital currencies. So that's going to do it for episode 16. And this is the final episode of Bitcoin Hard Talk for 2023. I look forward to seeing you in 2024. There are crazy things that are happening right now, and we all need to manage and build and protect our wealth around that. Always remember, you are alive at one of the most interesting, exciting, and tragic times in financial history. What I'd love for everybody is to build a position where they financially can support and contribute to the things that are going to be most meaningful and most impactful in the world. That means that we need to follow the money, combine geopolitics, combine Bitcoin, combine the proof of work network, combine the proof of weapons network, combine the proof of stake networks, follow the money, and I will continue to share with you exactly how I protect myself, because many people are going to get wrecked. Others are going to do incredibly well. And I really want for you to be on the right side of that change. So happy holidays, happy Christmas, happy Hanukkah, happy karma, happy whatever it is for you, whatever it is in your country. And remember that unfortunately, due to the proof of weapons network, we are actually in the middle of people that where Jesus Christ was meant to be born, depending on your faith, having many people blown up that aren't going to be able to just enjoy Christmas right now. So it's going to be a dark one. It's going to be really strange one. But as always, I will see you on the other side. I'd love to do it in the proof of work network, which is peace, love, unity. We debate things on social networks and Twitter spaces. Hopefully we can continue to have some kind of freedom of speech, because I'm not starting to notice the censorship going up and up and up. So if you would not, before I am completely censored, if you would like to continue this, then do me a favor. If you've enjoyed anything about this, here's some things you can do. Like this, tell the YouTube algorithm that you are enjoying this. Put a comment below and let me know what you'd like me to cover in 2024. Share this with anyone that you think needs to understand, build and protect themselves in all of these different trends. And if you want to share the journey moving forward, head over to simondixon.com, join, get a free membership there, and I'll update you on, there we go, just click the yellow button there. You can sign up to the membership portal, and I put all of our archives in there. I put the book. I'm still writing my next book. You'll be first to know. And we put the Great Depression of the 2020 video series in there as well. Okay, so that's where you can access everything, and it's completely free. And then you'll be on the mailing list, and I'll make sure you are up to date. Okay, so that's the last I've got for you for Bitcoin Hard Talk episode 16. Peace.